Alright guys, so let's get started with the final webinar in the price action challenge. This webinar is supposed to go for about 1 hour to 1.5 hours because um, there's going to be a few questions towards the end. I'm going to open up for questions towards the end, and I want to spend a good long while answering questions because I want to be sure everyone understands what I've been teaching over the past few days. But I do ask that you leave questions till the end. I want to take about 30 minutes to an hour to just get through some example trades. So I'm going to show you guys some real trades that have been taken over the last week or two. One of the trades was taken today, actually, on AUD. One of them was taken on Monday, I think, on USD CHF. So I'm going to be going through some very, very recent trades that have been taken using what I've shown you. I'm also going to show you a failed trade because I don't just want to show you the good trades. If I just show you the good trades, it's kind of like it's not really representative of the strategy. I mean, there are going to be some bad trades. Sometimes you do everything right and the strategy gives you a trade, but it doesn't work out for whatever reasons. So I'm going to show you a bad trade too that was taken this week on Euro USD. But let's get started with that. I'm going to throw up my charts. Here we go. I'm going to start with AUD USD. This is a 6-hour AUD USD chart. I know that's a bit of a strange time frame, but someone in the advanced course trades a 6-hour, and they're posting a lot of trades on the 6-hour, so sometimes I have it up. But this trade was also tradable on the 4-hour, and it looked pretty much the same on the 4-hour, really. So let me highlight this trade. So this is a AUD USD 4-hour chart now. Let me highlight this trade, and this trade was taken just today. So we had a bullish preceding trend. So we were talking about preceding trends and indecision in the very first webinar, the day before yesterday. We were talking about preceding trends and indecision. So we had this preceding trend, a bullish preceding trend. We had indecision forming on top an area of resistance. Now we talked about resistance in yesterday's webinar. Resistance is an area in which there are sellers. So we know there are sellers grouped up in this resistance area. There are sellers grouped up here and they're waiting to drive price down. They're waiting for buyers to come up here so they could enter the market and push price down. So what we had here was bullish preceding trend, indecision forming on top of resistance area, and then that indecision told us that sellers are starting to struggle with buyers and they want to push price down. But again, just if you guys weren't here for the first 2 days, indecision doesn't necessarily mean reversal. It just means indecision. It means that we went from a decidedly bullish market. So a decidedly bullish market, we went from that market to a decidedly buyer's market. All these are bullish candles. We went to a kind of undecided market where buyers and sellers are struggling. And that's what this candle told us. And the fact that it formed right on this resistance area, that was a pretty clear signal that sellers were trying to enter the market. And if you were here yesterday, you also noticed that we placed this resistance area on here last night in last night's webinar. So before this trade even came up here, before this trade even formed, sorry, is what I'm trying to say, we placed this resistance area, and it ended up resulting in quite a nice trade today. So let's just check out this trade and where the entry was, because today I want to show you guys entries. It's all well and good knowing that a reversal is probably coming, but if you don't know when to enter, you're never really going to get anywhere because, like I've said a lot of times before over the past few days, this is just indecision. This does not mean reversal, this candle here, it just means indecision. It's very likely for buyers to continue to push up after this candle forms. Just because sellers are fighting for control of the market, there's nothing to say that the sellers are going to win and take control of the market. Buyers can retain control of the market and they can continue to push up. So we need a way to kind of confirm that sellers have taken control of the market. So we need to confirm sellers have taken control of the market so we can jump in short and we can make some profit as price drops down to this area. So the way I look for confirmation with most of my trades, most of them, I look for price to break the low of the indecision candle. So this is the indecision candle here. I look for price to break the low of the indecision candle. So that would be this point here. Now the reason I want price to break the low of the indecision candle is mainly because if I'm going short, if I'm selling, I want to be selling with sellers. And it's in a seller's nature to create lower lows and lower highs. So it's in a seller's nature to create lower lows. So when the sellers are able to create a lower low over the previous low, so the previous low was here, when sellers are able to push lower than that previous low, that tells me that sellers have taken control of the market. And that's why I usually use the low of the indecision candle. So I'll usually use the low of the indecision candle as my entry trigger. And in this case, the low of the indecision candle was the entry trigger for this trade. It was here. Now, to be fair, this trade was helped along by a news release, but it was entered before the news release. The setup was there well before the news release, and it started pushing down quite nicely. And then the news release kind of pushed it the rest of the way and took it down into here, into the target area. So this ended up being quite a nice trade. It was helped along by news, but before the news, the price action was there, and the price action told us to go short here. So this trade was worth roughly 90 pips. Stop loss on this trade was about 30 pips. Now, the stop loss, what I like to do with my stop losses is kind of the opposite to what I do with the entry. With the stop loss, I try to place it above the high wick of the indecision candle. So I try to place it above the high wick. So in this case, this was the wick, and I would have placed it above there. So the stop loss was here. And that made the stop loss from the entry. The stop loss was 35 pips, so just a little bit above the wick. So 32 to 35 pips in this case. Entry was here, and the target was down here at the support area. Could also split this position into two. Sometimes I do that. I split positions into two, so I'll take out half my profit around about halfway into the space between the resistance areas. So this is the resistance area, this is support area. So halfway between the spaces, roughly here. Sometimes I'll take profit around about this point, and then I'll take my second target down here. So this could have been traded either way in this case, but today the target was just down here at the next resistance support area. So that's one of the entries I use. I use one of these entries because I use this entry because it tends to be the best way to confirm that sellers, in this case sellers, but if you're looking for a long trade, obviously buyers, it tends to be the best way to confirm that sellers have taken control of the market, because they're creating a lower low, they're creating a new low that tells you sellers taking control of the market, and to me that's a very good sign that this trade's going to work out and it's going to push down and hit my target. So the problem is you can't always use that wick. You can't always use the lower wick, because sometimes, and I'm going to show you a few other examples from the last few weeks, sometimes that wick is going to stretch down to here, and then you can't make your entry down here, because if your entry comes down to here, your stop loss is going to have to be huge and your target's going to have to be much smaller. Doesn't really work out. So we don't always use the lower wick, but when you can, when it's not too far away from the open of the indecision candle. So this is the open of the indecision candle. When it's not too far away, I use the wick. So not too far away is roughly 10 to 20 pips, depending on the pair. On AUD USD, 10, 15 pips away. If the lower wick's around about 10, 15 pips away, I'll just use the lower wick as an entry trigger. Let's remove those lines. So is there any questions about this particular trade that was taken today? Do you guys have any questions about this one? If you don't, we'll switch over to another chart and we'll look at another recent trade, and we'll look at a bit of a different entry strategy on that trade. Alvaro, no, it's not good to go down to the 15-minute chart. I don't do that. Some people do, but I don't do that. I just stick to the time frame that I'm working on. In this case, it was the 4 hour. Henry, I don't use Fibonacci. Susie, I don't only take one trade per week. My minimum target's one trade per week, but I take 1 to 3 trades per week. My target is 100 pips per week. So when I meet my target, which is usually done in 1.5 trades, that's generally when I stop trading. Um, I never take 1.5 trades. Obviously, I'll take the 2 full trades. So generally speaking, I'll take 2 trades per week. I don't have a trade target. I have a pip target. Okay, that's a good question, Kevin. Why was the support resistance area still valid? As it had been broken? Um, to me, support resistance is it stays valid even if it's broken. It stays valid. I mean, just because candles came up above support resistance here, uh, well, resistance. Just because candles came up above resistance by a little bit, it doesn't mean the resistance area is broken. I mean, price is going to go through areas of support resistance all the time. See, this case it went right through it, then it comes back down to it here, and it bounces straight off it. So just because it broke through it here at this point, it doesn't invalidate the support resistance. When price comes back down to the support resistance area, it bounces off it. Um, so yeah, I don't remove support resistance just because it's been broken. And there's the other example, like this one here, it was broken here, but it bounced right off it here again. So yeah, I don't move support resistance. We're going to be looking at other entries very soon, Fabrice, so I'll answer that question soon. Okay, guys, I think that's enough questions for now. I'll just answer that last one from Zeke. Does the number of times a support and resistance area has been hit tell you in fact how strong it is? Yeah, generally speaking, I mean, if in the last, say, the last month or two, price has been rejected pretty strongly or pretty heavily from a area of support resistance. So if stuff like this happens, and it has all those bounces from it, that tells me it's a pretty strong area of support resistance, and I'd be more inclined to see a possible reversal there. But honestly, I don't let it affect me too much, because if you start thinking or assuming that this area of resistance is going to be stronger than any other area of resistance just because it's been hit a few times, you just get a little too confident with that area and you start making mistakes. So I don't let it affect me too much. But generally speaking, yeah, if price bounces from a area of resistance very strongly 1 or 2 times, I tend to expect next time it's up there, if I get indecision, for it to be a pretty strong bounce. But don't let it cloud your judgment. Anyway, guys, that's enough questions for now, but keep those questions for later, and we'll go back to them. I'm going to switch over to another chart. I'm going to show you another recent trade. This trade was taken on Monday on USD CHF. So we're going to take a quick look at this trade, and I'm going to explain how with this one there was a bit of a different strategy used for entering this trade, because this was a particularly tricky one. So I wanted to show you this one because it was particularly tricky, and how sometimes you have to kind of improvise with your entries. You're not always going to get like a perfect wick that you can enter from. Sometimes you have to improvise a little. This is a daily chart, a USD CHF daily chart, and I'm going to highlight the trade for you guys. This was the trade. It had a bearish preceding trend. It had indecision right here, forming on top of an area of support, and this was the Friday. Now, I don't normally trade trades that formed on a Friday. I don't normally take the trade on the Monday unless it's a daily chart or above. On the daily chart, you kind of have to do that, because if you let the weekend disrupt your trades on a daily chart, you're never going to get any trades on the daily chart, or very rarely you are. So this trade was split up by a weekend. This last candle here, the white candle here, that was the Friday, and this indecision candle, the first indecision candle, was the Thursday. So let's check this trade out. I'm gonna highlight it again. So we had the bearish preceding trend. So we had the sellers pushing down quite strongly into this area of support, and we know in an area of support there are buyers. Buyers group up in areas of support, and when sellers hit this area of support, we got an indecision candle, and then we got a second candle that I wouldn't really call it an indecision candle. It was more kind of a decision candle, I guess. But it was kind of telling us that there's a struggle. There's a struggle in this area between buyers and sellers. First candle has that low wick, so sellers tried to push down, buyers pulled them back up. Then this candle has a bullish body. So this candle is leaning more towards buyers taking control because of the white body, but it hasn't made a new high. It hasn't managed to make a new high. So there's still sellers in the market at this point, and they're still kind of struggling for control of price. And then the weekend comes along. So had this not been separated by a weekend, had this trade not been separated by a weekend, my entry would have been at the top of the wick. The wick would have been here. So my entry would have just been there at the top of the wick, and that would be perfect. But the fact that it was separated by a weekend and then it gapped up when the new week opened, gapped up a little bit. I didn't really like the idea of entering right at the start of the week. Just because it gapped up a bit, and it was above my entry level. To me, I wasn't convinced enough that buyers had taken control of the market. That's not convincing me that buyers have taken control of the market. So with this trade, this is how. Not everyone, by the way, in the advanced course traded it in this way, but this is how I would have handled this trade. And it would be to use a psychological level. Now, if you don't know what psychological levels are, they're rounded numbers. Any rounded number on a chart is going to have a little bit of support and resistance. And usually the bigger the rounded number, the more the support resistance at that level. So for example, the biggest one on this USD CHF chart would be right here at the 1.0000. I can't get it exactly, but the 1.0000, that's an extremely strong psychological level. But there are smaller psychological levels, and you're generally just looking for the zeros or looking for the 50s. So 0.9850, which is roughly there, that's a psychological level. It's just these rounded numbers because traders tend to place their stop losses and their entry targets at rounded numbers. And that's why rounded numbers tend to have a little bit of support resistance. And if a rounded number is broken, so if the buyers, in this case, because I want to buy here, it's a bullish reversal trade that I'm looking to take. If the buyers are able to break through the psychological level, even though psychological levels are minor support resistance, if the buyers are able to break through that level, that indicates to me that they have taken control of the market because they've been able to push up and then they've been able to break through that level. But there is a problem here, and this is why I wanted to show you guys this trade, because with this trade you have to improvise a little with your entry. It's not as easy as just jumping in as soon as the wick is broken. You have to improvise a little with this one, and you would have to enter on the retrace. So let's throw a line up here. Just make it a reddish color. There we go. So I would set this as my entry level in this case. This level here, I would set it as my entry level. But see, the problem with entering at this point here is it's way too far away from the open of the indecision candle, and it's way too far away from well, either of these indecision candles, because there's kind of two indecision candles here. So from the first indecision candle, it closes down here. It's around about 50 pips away. From the second indecision candle, which closed up here, it's around about 35 pips away. So if you think about that, the indecision candle closes here, and technically you want to enter at the high at the wick here, because I like to enter at the wick, as I explained with the previous trade, and even from the wick, this is 20 pips away, this line. So that presents a bit of a problem, because you've already eaten up 20 pips of this trade by the time your entry trigger is broken. So by the time you get in, you've already lost the opportunity to make 20 pips, because it's already moved up a fair bit, and that's not good. So in a case like this, I would enter on the retrace. So I would wait for my entry trigger to be broken. So my entry trigger is the 92.50, because that confirms to me that buyers have taken control of the market. And that's what we want to do. We always want to confirm that if we're going to go long, buyers have taken control of the market. So once that's confirmed, once I know buyers have taken control of the market, I'll wait for price to retrace a little back down to my previous entry trigger, which would be the high of the indecision candle, and I would jump into the trade there. And the other benefit of doing this is you're going to have a much tighter stop loss. So your stop loss would be around about 60 pips. It sounds like a lot, but keep in mind this is a daily chart trade. So stop loss is 60 pips. Target is well over 100 pips, almost 120 pips. So it's almost double the stop loss. So sometimes I'll do that. Sometimes I'll enter on the retrace. Sometimes I'll find a psychological level that's nearby, and I'll wait for that psychological level to be broken. Once that psychological level is broken, I'll wait for price to retrace, and I'll enter on the retrace. Because if I were to enter at the psychological level when that broke, my stop loss would be huge. My stop loss would be an 85 pips, 90 pips almost, and my target would be 90 pips. So it'd be 1-to-1 with my target and my stop, and it just wouldn't work out. So this is an alternative method. Sometimes you're going to have to improvise, and sometimes you're going to have to wait for the retrace to enter your trade. So yeah, this is an alternative method for entering a trade, a reversal trade. But always look to try and get in at the high of the indecision candle, or at the low of the indecision candle if you're trading a short, like was done with this AUD USD trade today. So you could enter at the low here, and that was just a perfect entry in this case. But in this case, it wasn't. You just couldn't do it, so you have to wait for it to push up, have to wait for buyers to confirm they're in control of the market, and then you let it retrace. Okay, so do you guys have any specific questions about this trade? If not, I'm going to jump over to another trade on USD CAD and show you a little more about entering on retraces. But if you have any specific questions about the USD CHF trade, just ask them now and I'll answer them real quick. Susie, no, I don't look at smaller time frames. I used to a long while ago, but I just don't see the point anymore. You can get good enough entries on the time frame in which you're trading. Michael, what do you do if your entry is gapped? I believe that's what we just talked about in this example. I just went through what I do if my entry is gapped, and this was gapped, so I didn't use the high of the indecision candle to enter. Herman, yeah, 1 or 2 pips. It depends on the pair too. USD CHF daily, yeah, 2, 3, 4 pips. But if you're talking about something like USD CAD, because USD CAD's an extremely slow moving pair, 1 or 2 pips is enough. If you're looking at Euro JPY, Euro JPY moves really fast. I'd be looking 5, 6 pips. It just depends on the pair, really. Yeah, it depends on the pair. How much past the trigger I'd be looking to enter at. Shiraz, how many pips above or below the psychological level would I enter? In this case, 2-3 pips, maybe 4 pips, just something like that. Um, I wouldn't let it go too far above, just a few pips. Kevin, all right, that's a really good question. A lot of thought went into this trade. Uh, did you set it using limit pending orders or more frequent visits to your screen? With a trade like this, to be fair, it's quite hard to just set limit orders to get into this trade, just because, like you said, there's a lot of thinking that went into it. Most trades that I take, this much thinking doesn't have to go into them. It's mostly about entering at the high of the indecision candle or the low of the indecision candle, the high or low wick. Um, but I'm showing you this example because I want to show you a bit of a variety. I want to show you some various different examples. So yeah, in this case, it would have been quite tough to enter this trade just by setting limit orders and stuff like that. You'd have to check out your charts quite often in order to get the best entry on this trade. And that is the question I was waiting for. Thanks, QA. What if the retrace doesn't go all the way back down to the original entry level? Then I'll just skip the trade. Because the retrace going back down, you know, that is important for my money management rules. I need it to go back down to my normal entry level because that's the only level at which um, I can take this trade and stick within my money management rules. Because if I trade it up here, it'll just be way out of my money management rules because I'd be risking 80 pips and only gaining 90 pips. Uh, my maximum gain on this trade would be 90 pips, and that would not work with my money management rules. So I would have to wait for the retrace. Um, it's essential to wait for the retrace on this trade. And if that retrace never comes, then I miss the trade. But there's always going to be another trade. I mean, there's so many trading opportunities each week with reversals. Doesn't matter if you miss a trade because of the retrace. Um, Sometimes you're going to miss them, and yeah, it doesn't really matter. Shiraz, I tend to set my target just a little bit inside. Shiraz asked if I set the target on the dotted line. So if the target would be specifically here, where this dotted line starts. I tend to set my target a little bit inside the dotted line, but it doesn't really matter. Most times I'll have an alarm around here, and when I hear that alarm ring, I'll open up my phone and I'll look at the chart and I'll just base it on how price is moving. If price is moving quite fast into this resistance area, I'll take out my target a little bit into it. If I'm setting just a automatic exit, I'd probably set it on the line just because there is resistance up here and I don't want it to just get specifically to this line and then reverse because there is resistance, there's sellers up there. So it just depends on if I'm around to watch the trade and stuff like that. If I'm able to watch the trade from my mobile phone or at my actual computer, I'll set my exit a little higher and just watch and see how price reacts around here. Um, Yeah, this was a valid short trade setup too. I didn't really like this one as much, to be honest, but you could have taken a short here if you wanted. Um, I just didn't like it as much because of the body of the candle was a bit big. It was the same size as the wick. And this candle still kind of like, it was a sign that sellers were entering the market, but it still looked pretty bullish to me. It still had a pretty big bullish body, and it had very little lower wick, which told me that sellers had gained pretty much no ground on the short side. So I wasn't too convinced with this setup here. Um, yeah, so I wasn't convinced with that one. Anyway, guys, let's move on to another trade. That's enough questions about this trade for now. Let's move on to another one. We're going to look at USD CAD. I want to show you another example of retraces. I showed you a retrace because of a gap in this case, like entry on a retrace because of a gap. But this time I'm going to show you entry on a retrace because of a long wick to the short side. So let's highlight this trade. This trade was taken, I think, last week. This USD CAD trade here in the advanced course. It was taken by some advanced course members, this trade. Okay, we had a bullish preceding trend heading into resistance, and then we got this candle here. Now, this candle was a pretty strong sign that sellers were entering the market. You see that it has a pretty big bearish body, so it was a pretty strong sign sellers were entering the market. Buyers tried to push up, but they were turned around. Sellers closed with a bearish body, and there was a nice long wick to the short side. But see, this wick, it makes it hard to get an entry because, like I said, I like to enter at the low of the wick. So if I was entering at the low of the wick here, so at the low of the candle, let's say the low of the indecision candle, if I was entering here, my stop loss would have to be huge to cover this trade. It would have to be massive to cover this trade. Have to be something like 50 pips, and my target's 30 pips, and that's just, you can't take a trade like that. Your stop loss is larger than your target. It just doesn't work out. So this is another example where I would use a retrace to enter this trade. So my entry would be here, because once sellers make a new low, once sellers are able to make a new low, that indicates to me that they've taken control of the market. It is now a market controlled by sellers. Buyers are no longer in control. Therefore, the reversal is going to work out in my favor. It is likely to work out in my favor. It's not always a sure thing, but it's likely to work out in my favor. So the entry is here at the 1.0400, and also this is a psychological level, the 1.0400, so it doubles as a psychological level. So it's not only the low of the candle, it's also a psych level, and you can see that sometimes price bounces from psych levels. They do provide a little bit of support resistance. So the fact that sellers were able to break this low, it tells us two things. They've made a new low. They've broken the low of the indecision candle. They made a new low, which is significant, tells us they're in control. And then they've also broken a psychological level, which again tells us, hey, sellers are in control of this market. I'll answer those questions later, guys. So this was a pretty good entry level, but it was a pretty good entry level based on price action. But money management wise, you couldn't use this entry because your stop loss would have to be way too big. So this is another example where you would use a retrace to enter this trade. When sellers break here, you set your retrace, you set your entry level back up to, it really depends where you want to enter, but my entry level would be here, kind of at the top of the resistance area. That's where my entry level would be, and that would give me a much better stop loss. So stop loss would be something like 30 pips. Target would be something like minimum 45 pips, but more like 50 pips, something like that. And that's just the first target. Second target would be a fair bit more. But that's another example of entering on a retrace. So we're waiting for sellers to confirm they've taken control of the market, because that's very important. We're jumping into a short trade. We want to be selling with the sellers. We want them to be in control. Once we confirm they're in control, then we look for our entry. This doesn't happen very often, entering on retraces, but I'm not just going to show you like an example of entering at the wick like I did with the first one, and say that's all you're ever going to have to do. Sometimes you're going to have to use retraces, and in this case, a retrace had to be used, and price came back up, and this trade would have been quite a nice trade. We'll talk more about targets soon, but could you please keep that question for a little bit, and I'll answer that question. I'll answer that question soon because it's an important question. Osita from the UK. Sorry if I pronounced your name wrong. Um, if I always target the next support resistance area, it's an important question, so please keep that till the end, and I'll definitely answer that. Is there any question specifically relating to this trade? Do you guys have any queries about this trade in particular? USD CAD 8-hour chart trade. You want to see the daily time frame for this trade? It's not too impressive on the daily, it's just an instant reversal because I'm not sure why you want me to show you the daily. The entry candle was this candle here. Yeah, Daniel, sometimes charts are going to look slightly different because your charts are going to open on GMT time, mine open at GMT plus 2. My candles open at GMT plus 2. So your new candle starts maybe, I'm guessing, at midnight GMT. Mine starts at 2 a.m. GMT. Or maybe yours starts at GMT minus 5 and mine starts at 2 a.m. So they're going to be slightly different because you're going to have different open. Well, there you go. Yours does GMT plus 3. Mine does GMT plus 2. So you're going to have slightly different looking candles. It shouldn't really matter at the end of the day because price action is still price action. Buyers and sellers, they're still reacting the same way at these levels. So if your candles open or close 1 hour apart, it doesn't usually matter. Some trades are going to be a little trickier to spot. But most of the times it doesn't really make a difference. I mean, you could tweak the time frame you're looking at. If you jump down to the 6 hour, then it's going to you're probably going to see the trade that I'm seeing on the 8 hour. You'll probably see it on the 6 hour or the 4 hour or you know, a smaller time frame. So yeah, sometimes the your charts are going to look slightly different, but it's no big deal. Which candlesticks are the correct ones to look at? We discussed that in the first webinar in this series, so you're going to have to watch the recording for that information. Peter, I've already answered this question with the previous trade example, but I'll answer it again. Peter's asking if the retrace doesn't happen, would I skip the trade? Yes, if the retrace doesn't happen, I would skip the trade because there's no sense in getting into a trade in which your stop loss is larger than your target. It's just not the best way to trade. So if the retrace doesn't happen, I skip the trade. But as I said with the previous example, that's no big deal because you get so many of these setups each week that if you miss one trade because it doesn't retrace, because the trade doesn't fit within your money management rules, it's not really going to affect you at the end of the day. It's not a big deal. Sometimes you have to skip trades because unfortunately they don't fit within your money management rules, and money management at the end of the day is pretty much the most important thing you can do in your trading. I mean, you can have the best strategy in the world, and if you're not managing your trades right, even the best strategy in the world is not going to help you. You're still going to be losing. You need to manage your trades right. So I will skip any trade that's not fitting within my money management rules, and if it doesn't retrace back up to a better entry, doesn't fit within my money management rules, and I skip it. No, I don't go down to a lower time frame. I never go down to a lower time frame. It just gets too confusing going down to lower time frames. I stick to the time frame I'm working on every time. Okay, this is the last question about this trade. Then we're going to skip to the Euro USD trade because I want to show you guys a losing trade from this week. Because yeah, it's kind of pointless showing you just winning trades. What are the money management rules? A question from Vijay. Um, Money management rules are personal to a trader. I mean, like, I can't give you money management rules. Um, because money management for my account is going to probably be different to money management for your account because we're probably trading different amounts of money. Um, Money management rules aren't really judged by the strategy themselves. The strategy obviously is going to have some effect on your overall money management rules, but there's so much to money management, including your account size, your goals, and everything like that. That our money management is not something I can actually give you. But I do have there's a free course on Forex for Noobs in which I discuss money management in great detail, and I teach you how to write your own money management plan. There's a link to it here, so you could check that out. It's a free course. Um, it's about 4 hours of free videos in which I discuss trading plans, money management plans, and some other cool stuff like trading journals. So yeah, money management is not going to be discussed in tonight's webinar because I can't really cover all money management rules. Um, okay, we're going to go to the Euro USD trade. And I know there's other questions, guys. There's so many questions being asked, and I just can't answer them all. Otherwise, I'll be here for a long time. But I am going to set aside a huge amount of time at the end of this webinar for questions. So just please hold your questions now, save them till the end of the webinar, and I'll get to them. Okay, I want to check out this Euro USD trade. Show you guys, you know, where the entry would be, but I'm also going to show you guys how this trade didn't really work out. Ended up being a bit of a failed trade, this one. It's taken on either the 8 hour or the daily. It just depends where you would have traded it. Some people traded it on the 8 hour, but I would have taken this one on the daily personally because it didn't look as good on the 8 hour to me. So this was the trade setup here. Let me highlight it for you guys. And we had bearish preceding trend. Then we had indecision forming on top of this area of support. So that indecision candle, immediately told us that buyers were trying to enter the market. So we went from a decidedly bearish market, sellers in control, to a market in which buyers were trying to take control, fighting for control of the market. And the other sign that buyers were fighting for control of the market is that sellers couldn't make a new low. Check out the low here and then the low there. Sellers weren't able to make a new low, so that again told us buyers were, they were taking control of this market. So we got this indecision candle forming on support, and the entry for this one was easy. Entry for this trade was the high of the indecision candle. There wasn't really much to it, to picking an entry on this trade. Higher than indecision candle was more than a good enough entry for this one. But see, the problem that happened with this trade is news. News came out and it dropped back down here, and the trade was stopped out. So yeah, this trade didn't work out, but the entry for this trade and the entry for most of my trades just ends up being the wick of the indecision candle. So in this case, it was here. Stop loss was around about here, just below the wick of the indecision candle. So had a stop loss of around about 50 pips, target of around about 80, 90 pips or so from the high of the indecision candle. And second target could have been further depending on how price was moving. A second target could have been the next resistance area up here. But yeah, this trade didn't work out. This trade was stopped out because of news. But that's going to happen sometimes. Sometimes trades are going to be stopped out, and I just wanted to show you guys that not all the trades this week were winners. They're not always all going to be winners. There are going to be some failed trades, and Yeah, this one was a failed trade. This one failed because of news technically, but they're not all failing because of news. Sometimes you see these great setups like this one, and they look amazing, and it looks like buyers are taking control of the market, and you jump in, and then the buyers just don't have enough power to keep running up and hit your target. It's going to happen sometimes. So I don't want you guys to be under any illusion that, oh wow, look, there were like five great, amazing trades this week. There are going to be failed trades every now and then. Um, as long as most of the trades are winners, that's what's important at the end of the week. So yeah, this trade would have been a failed trade. But yeah, the entry for this one, like I said, high of the indecision candle, easy entry, and you're going to find most of your entries just end up being the high or the low of the indecision candle. High if you're taking a long trade, low if you're taking a short trade. That's a good question, Peter. Would I enter the trade once the wick is broken for the second time? Personally, I wouldn't do that. Some people in the advanced course do that. They'll enter the second time it breaks, and they tend to do well sometimes with doing that. But for me, it's like a case of once bitten, twice shy. If I lose the trade on my first attempt, I don't really want to go back to that same trade. I just skip it. Um, so it just depends on the trader. Things like that, they depend on the trader. Things like that, they're not based on the strategy, because it's just the trader's decision at the end of the day. And the price action, and this is the important thing to note, the price action is still there because the price action for this trade, it was telling us sellers had control of the market. Um, they hit this area of support. Buyers started entering the market. Then it started reversing. So buyers were taking control of the market, but then the news came along and pushed it down and took us out. But when then buyers regained control and it started pushing back up, and I think also the push back up was helped along by news. Um, so the overriding price action was saying that buyers were going to take control, so you could have entered, but it's really up to you if you decide to enter again. At the end of the day, if you're reading the price action and the price action is telling you that buyers are taking control of the market, if you want to jump into that trade, you can jump in because you're trading you're trading with the price action. You're trading with the knowledge that buyers are in control, so you're buying. Um, yeah, generally speaking, if a big news report comes out, a news report that I'm very confident is going to move the market, I will not take the trade until about 30 minutes after the report comes out. Um, well, not 30 minutes always. If the report does affect the market, I'll wait 30 minutes. If the report doesn't really affect the market, then I don't bother. But if I'm looking at a trade and it hits my entry trigger, and I know that 10 minutes later a major news release is coming out, I'm not going to enter the trade. I'll just wait it out and see. But for the most part, I don't tend to pay too much attention to the news because if you start staying out of the market every single time there's a red report on Forex Factory, you're going to miss so many trading opportunities. And the other thing about is news tends to be factored in well before the actual release comes out. So a lot of these reversals they form because of because the news is being factored in. So price is moving down, then the news starts getting factored in, and reversals start to form. So a lot of the reversals that form, not a lot, but some of the reversals that form are forming because the news is coming and because the market's reacting to what that news is gonna be released as. Um, Osita, that's a pretty decent question. Do the amount of candles in the preceding trend affect um, the success or failure of the trade? No, not really. Sometimes there's a single candle preceding trend. If you got a nice, for example, this candle here, this long bullish candle, if indecision forms here on Friday, and then on Monday, I'd be perfectly happy to take a short from here. based just on a single candle preceding trend, because it's a big candle, and because this candle has spanned from one support area to the next resistance area. That's enough of a move for me to consider that a very strong preceding trend. So no, the the size of the preceding trend doesn't really affect the overall trade. Um, well, I think we've covered enough examples of the kinds of entries I use. 90% of the time, my entry is just a higher than indecision candle. There are some times where I'll use the psychological level, and if the psychological level is too far away, I'll wait for the retrace. Or if the wick, like we saw with the USD CAD trade, if the wick's too far away, I'll enter on the retrace. So that's what I use for entries. I use the high or low of the indecision candle, or I use a psychological level that's nearby, and sometimes I'll wait for retraces. It's pretty straightforward way to enter trades, but what we're essentially looking for, and this is what you always have to keep in your mind, the most important thing about entering these trades is when you're looking for a reversal, if you're looking for a short reversal, you want to confirm. So if you're looking to a short reversal, you're looking to sell, you want to confirm that sellers have gained control of the market. Because before the reversal formed, buyers were in control of the market. Let me get my drawing tools and I'll just highlight. So before the reversal form, buyers were in control of the market. Then you get the indecision. So when you're going short, when you're jumping into the short trade, you want to confirm sellers have taken control of the market. That's very, very important. And that's what your entry has to do. It has to just confirm to you that sellers have taken control. So when sellers make a new low, that confirms they've taken control of the market. And that's where they made a new low in this case. And that's why I usually use the high of or low of the indecision candle. Kelvin, is this strategy valid in equities and commodities? This strategy is based on price action, and price action is applicable to all markets. I've used this strategy a little bit in the futures market, and it seems to be just as effective in the futures market as it is in the Forex market. So I've not used it in equities and commodities, but price action's price action. Traders are traders, and the market's moved by traders, by people at the end of the day. And I can't imagine why it wouldn't be applicable to equities and commodities. Okay, that's a good question from Peter. Um, all right, where I'm just going to pull this chat up one sec, guys. That way I don't miss some of these questions that have been asked because it keeps scrolling down. Okay, so we're almost at the end of the hour. So I'm going to start taking questions now. Now that I've discussed entries and that you guys have a pretty decent idea of how I enter trades, I'm going to start answering questions about entries and just about the strategy in general. So any questions that you have, um, especially any questions that you have even from the last few days, what you've learned in the last few days, and how it's all put together and how you actually take the trades, feel free to ask them now. We've got, I'd say, 30 minutes or so for questions, perhaps a little bit longer. So we'll start with questions now. First question I'm going to answer is from Peter C. Do you find it best to filter trades in the direction of the trend on a higher time frame? No, I don't. I don't bother. I don't bother filtering my trades based on the trend on the daily chart, for example. So if I'm trading the 4 hour, I don't really care what the daily chart trend or the weekly chart trend is. I have tried to do that to filter trades based on the trends on the higher time frames, and more often than not, I just miss very, very good trades. Just because the weekly chart is trending in one direction. So just because the weekly chart is moving down, it's not going to, price on the 8 hour chart is not going to move straight down. There's always going to be points in that trend where price kind of like has to come back up for a bit and then move down, and has to come back up for a bit and has to move down and then come back up. And usually you're gonna see that when price is coming back up, it does it from the support areas, and you can enter a reversal trade there, and then you can enter a reversal trade on the way back down in the direction of the trend. Then you can enter a reversal trade here, etc., etc. So I don't really care what the trend on the weekly chart is if I'm trading the 8-hour chart. It doesn't really bother me. I'm just looking for very specific setups on my 8-hour chart, my 4-hour chart, my daily chart. When I get those setups, I just jump into the trade. Is my strategy valid on gold? And why don't I trade gold or silver? I've seen that question a few times. It's just a personal choice. I don't trade commodities. Not a big fan of trading commodities. They're a little volatile, but it's not because my strategy doesn't work on them. I just like slower moving, calmer pairs these days. Um, and commodities are just a little too crazy for me. So I'm not a fan of commodities. I don't trade them. But a lot of people using my strategy, a lot of people in the advanced course, uh, are trading commodities. They're trading gold, silver. So the strategy can be applied to that. If you want to take what you've learned over the last 3 days and apply them to commodities, go ahead. It's going to work on those on commodities and on other stuff. Norbert, do I use only the 8-hour to draw my support resistance areas? If you were around for yesterday's webinar, which I'm guessing you weren't because I went over that a few times, I use 8-hour to draw them, but it doesn't really matter. You could use the daily or the 4-hour to draw them. My support resistance for the 4-hour, the 6-hour, the 8-hour, and the daily, they're all the same. So um, I use the same support resistance for all these time frames, and I draw them on the 8-hour, but you can draw them on the 4-hour if you want. You can draw them on the daily if you want. Doesn't really matter. Jerry, I believe I already answered that question because someone else asked something similar. But just answer it again, just to be sure that I've answered it for you. Jerry is asking if I usually trade with the trend, or do I just take trades when they show up? So I don't trade with the trend in mind. I don't mind counter trend trades. There's nothing wrong with trading counter to the trend because the trend is always going to have resting periods. There's always going to be resting periods in a trend. It's going to move down, it's going to come back up, it's going to move down more, come back up. There's always going to be those resting periods where the trend retraces a little bit, and that's where you usually get some counter trend reversal trades. So I don't bother worrying about what the trend is. I am perfectly happy to trade against the trend. All right, Peter, that's a good question. I'll talk about my exits a little bit. Um, Again, exits are one of those things that. Oh, what did I do there? Exits are one of those things that are based on your money management rules. A lot of exits tend to be based on money management rules, but generally speaking, with me, the way I exit trades is I try to target. Oh, 1 second. Let me just go to the USD CHF trade. And I'll highlight it. Actually, I have a better example trade. The trade taken last week on Euro CAD, I think. Yeah. Let's look at a trade we haven't looked at yet. Here we go. Um, so with this trade, my target would be, uh, generally speaking, I would target somewhere in between the support area, the next support area, with half of my position. So my target would be around about here with the first half of my position. Then I would take out 50% of my position here. I would move my stop loss to the break-even point, the entry point, and with the rest of the position, I would target the support area here. So that's what I tend to do. I tend to target the around about the midpoint between the areas of support resistance. So this is the area of resistance, this is the area of support, this is the midpoint. I tend to target some pips at the midpoint. If the midpoint is going to be smaller than my stop loss, then I'll just target a little bit lower. But I tend to take some profit out as the trade moves down. I don't always target the next support area outright, because price tends to kind of sometimes bounce away in the middle here. So I tend to take some profit out in the middle here. Not everyone does that though. Again, like people who trade my strategy in the advanced course, I say at the start of the advanced course, you should take my strategy and kind of take everything you learn, first use it like I use it, and then kind of make it your own, because it's important to make a strategy your own and to make it fit within your own money management rules, your own account, and all that kind of stuff, your own trading style. Some people in the advanced course, they do just outright target the next support area every time. They don't take profit anywhere in the middle. They outright target the next support area every single time. And it works for them overall. But for me personally, I just take some profit out around about the middle. So I hope that answers your question. I've already answered that, I guess. Sorry for the pause, guys. I'm just reading all the questions because there's a lot that I've answered. A lot of people have asked us very similar questions, so just trying to catch up and find something I haven't answered yet. Shiraz, can I give an example of when I just used a psychological level? I haven't done that recently, so I can't really think of an example. I don't often use the psychological level for entries. More often than not, like I said, I use the high or low of the indecision candle. So I can't really come up with an example right now of when I used the psychological level for an entry without waiting for a retrace. I wish I could, but yeah, I don't have a recent example that just springs to mind about using psychological levels as entries. Which pairs do I trade most often? I tend to find myself trading Euro USD, GBP USD, AUD USD, and USD CAD most often. GBP JPY, Euro JPY, I trade a little bit sometimes, but also some of the odd pairs like Euro CAD. Euro CAD tends to be quite a nice pair. GBP CAD, AUD JPY too. This is a bit more common than Euro CAD. But most of these pairs, most of these are kind of odd pairs on my down here. I only have them here because people in the advanced course, there's a lot of people in the advanced course trading a bunch of different pairs, and they'll ask me, "Hey Nick, I'm taking a trade on EuroCAD. Can you check it out? Hey Nick, I'm taking a trade on AUD JPY. Can you check it out?" And I check it out for them, and that's why I have so many charts open down here. But generally speaking, for me, it's mostly about AUD USD, USD CAD, GBP USD, Euro USD. I mainly monitor those four pairs. But if someone were to share a trade in the forum, in the advanced course forum on EuroCAD, for example, I would definitely take it, because if I have the chart open and it looks like a great setup, why not take it? Anyway. Fabrice, trade taken on USD CAD was against a trend line. Yeah, I don't worry too much about trend lines. It's not a big deal for me. I only really worry about horizontal support resistance. That's a pretty good question, Mark. If your trade immediately begins to go the wrong way as soon as it's triggered, will you let it reach your full stop loss, or determine a point where you feel your premise has been invalidated and minimize your loss? It really depends on the situation. Most times I'll let it hit my stop loss. The reason I'll let it hit my stop loss is because the stop loss is usually placed at a point at which I feel the trade has got to the point at which it can no longer return. It can no longer be profitable. Um, I feel when I place a stop loss, um, it's usually at the point at which if the buyers push up into this area here, in the case of, let me highlight the trade. So if the buyers push up into this area here, where my stop loss is, that is the point at which I say, well, you know, buyers definitely have control of this trend, and I was wrong to think that sellers had control of the trend. And that's the point at which my premise has become invalidated, and that's where my stop loss usually is at that point. So I tend not to minimize the losses. I tend to just stick to the stop loss because the stop loss is at that point that you're asking about. How do you manage your trades, trailing stops using levels forming on L4, for example? I don't use trailing stops. I usually manage my trades with alarms that ring on my mobile phone, but they can just as easily be managed with limit orders, etc. Peter, that's a pretty good question. Do I leave a portion as a runner that will reach the next support resistance area? Personally, I don't. I don't. I don't like to. Most times, I don't like to leave part of the trade open after it hits the first support area to try and target the next support area down here. But again, some people in the advanced course do this, and they tend to be somewhat successful with it. Um, there's a lot of variety with this kind of trading strategy. There's a lot of variety in how you take your targets. Um, that's something you have to decide for yourself, how you handle the trade, how you manage a trade, and what your target's going to be. So I don't do that, but it can be done. I've seen it done. It can be done. Do you have a predetermined number of trades per week, or do you just trade whatever setup you like? Um, I I just trade till I reach my 100 pip target. Um, the 100 pip target is something that I use. I personally have a 100 pip target, but I realize that's a little small for a lot of people. But for me, it's fine. I'm happy with 100 pips. The strategy is capable of a lot more than 100 pips. You don't have to stop at 100 pips. It's just what I stop at. I'm happy with 1 to 2, sometimes 3 trades per week. I average probably 2 trades per week, and once my target is hit, and it's usually by that second trade, that's me done for the week, and that's usually by Wednesday or Thursday. Um, but you could take more trades than that if you want. There is no predetermined amount of trades. I think it's better to work with a pip target. So if your target's 300 pips per week, you trade until you meet that target. David, that is a good question. There is a bit of a difference in success rate with my time frame. So David's asking, is there a different success rate for different time frames? Is the daily more successful than the 8 hour or the 4 hour? I've actually found that the 8 hour time frame is the most successful time frame for me. 8 hour chart trades, they just tend to, I can't remember the exact numbers. I wish I could. And I don't have them in front of me where I could read them out. But I have something like a 78, let's say 78% success rate on the 4 hour, and an 86% rate this 86% success rate this year on the 8 hour. And 86% is just phenomenal. It's just unheard of for me. It's just crazy. But the 8 hour chart, it just tends to give me so many good trades and just accurate trades. And then the daily, it's back down to what the 4 hour is, where it's something like high 70s this year, 79, some 77, 78, 79, somewhere around there. Like I said, I can't remember the exact numbers, but the 8-hour chart, it just gives me so many good trades. I love the 8-hour chart. If you can get access to 8-hour charts, go for it. It just gives so many good trades. EuroCAD is the one he meant. I assume you're talking about Kelvin. All right, Kelvin also said EuroCAD. This EuroCAD trade. Damn it. I don't like how these lines work on thing. Okay. Let's zoom in here. Wait, I think I put this line on the wrong area. Damn it. Here we go. This used to be so much easier when I traded GFT. It used to be so much easier to get to drop down to a smaller time frame to look at the price action in a little more detail with the Dealbook 360 platform. So as you were saying, this trade moved up a little bit to here, and then it came down. This trade was entered around about here. Around about, wait, what was the exact number? I can't remember because it was 2 weeks ago. But let's go back to here. Let's zoom in. So this trade was entered on this candle here as it came down to the low, and it retraced up to around about here. Wait, where was it? Around about here. So this was another one of those retrace trades that I was talking about earlier. It dropped down a fair way, and then it was entered on a retrace back up to here, and it came up to here, but it didn't hit the stop loss. The stop loss was around about 30 pips. It didn't hit the stop loss before it came down, and it met its first target at around about 90-ish pips. Could you give a typical... Could you give a typical ratio of winners to losers we can expect when we're proficient with the method? It's hard to say, but all right. But personally, I win 8 out of 10 trades. All right, let's say I win 8 out of 10 trades, but you know, I've been trading the strategy for quite a long time, so just because I win 8 in 10 trades, it's not necessarily going to mean that you're going to win 8 in 10 trades, even after you've become proficient with the strategy. I'd say most people in the advanced course are doing about 7. Most people who are proficient in the advanced course, not absolute newbies, are doing about 7 in 10, 70% thereabouts. Some people are up at 8 in 10, like me, but for the most part, around about 7 in 10. If you miss the entry of the trade, we got about 15 minutes left. If you miss the entry of the trade because it doesn't retrace to where if my I've already answered that question. So, oh, damn it, I lost my place with the questions. Okay. If there are several indecision candles in a support resistance levels, can the trade be traded, and which candle would be taken as reference to enter and place a stop loss level? Um, Generally speaking, it's the first indecision candle that is used as the reference. If there are several indecision candles, you can still take the trade. Wait, let me show you the Euro USD trade from this week, because some people traded this Euro USD trade on the 8-hour. So they did it a little differently to what I did, to what I showed you guys on the daily chart. So you can see there's several indecision. Wait, let me highlight this. So we got 1, 2, 3, 4 indecision candles in this case, and the entry for this one, it wasn't at the top of the indecision candle because it was only 7 pips. It was a little close, so the entry was roughly here. I think that most people got into this one, and they got in at this candle. A lot of people got in on a retrace. But see, the point is, there were a lot of indecision candles in this one. So when this trade was taken, based on the first indecision candle, another 4 indecision candles formed, and it started to feel like this trade was dragging out. And it didn't look like such an amazing trade after that, and it didn't end up being such an amazing trade. It ended up dropping down and getting stopped out. Stop loss was, I think, somewhere down here or something like that. I can't remember exactly, but the indecision candles, when you start getting several in a line, it starts to mean that maybe you've jumped in a little too early. Maybe you've jumped in a little too early because there's still indecision going on. I mean, when you jump into a trade, you're looking for decision. You're looking for buyers to have taken control of the market. And if there's still indecision after you've entered, that's generally a bad sign. It generally means buyers have not taken control of the market, in this case, in the case of a long trade. How do you cope with stops that have been taken by intentional spikes? You just cope with it. It's part of the market. Sometimes your stops are taken out. You just deal with it and you move on to the next trade. As long as most of your trades are winners, that's what matters at the end of the day. That's a really good question, Daniel. That's a really, really good question. Would you consider Monday as a good day for you to start trading your strategy? So Daniel's asking, is Monday the day I start trading my strategy? Generally, no. Generally, I start looking for trades on Tuesday. Don't often get very many trades on Tuesday. Wednesday, Thursday are the most active days. And it's just because it generally takes a little while for the trades to set up. It takes a little while for price to like move down into a support area and then reverse, or move up into a resistance area, form indecision, and then reverse. So I very rarely take a trade on a Monday. If I do take a trade on a Monday, it's usually on the daily chart, um, but it is quite rare. Most of my trades are Wednesday, Thursdays. Stop loss was quite a bit over the previous indecision candle. Shiraz, you're referring to Euro CAD trade. This trade here. Stop loss was around about 30 pips. Stop loss was, entry was here. Stop loss was around about 25, 30 pips. If the entry, if you get a good entry, then you throw your stop loss up to a reasonable level. I mean, 30 pips is a very, very tight stop on EuroCAD. When you're targeting, something like 90 pips, it's a 3-to-1 3-to-1 ratio. So the stop loss is around about 30 pips. It's even less than 30 pips. It's like something like 25 or so pips. It was still a very, very tight stop. This trade here, I'm not sure if this was a trade. It could have been a trade. It looks like a potential setup. I think some people took this trade actually, and it ended up being a losing trade. Some people went long here. So I think this was possibly a bad trade. I'm not 100% sure though. I didn't take this trade, but I think some people in the advanced course did take this trade. Ended up being a bad trade. Some of the other people that entered this trade, the first trade, wait. So let's highlight this. Okay, so some of the people who entered the first trade, this trade, they were still in the trade at this point, and they stayed in. But there were a few people, if I remember correctly, that went long here, and this ended up being a failed trade, obviously. But you know, it happens. Not all your trades are going to be winners. This was a failed trade. Are there any specific news announcements that you would avoid at all? NFP, CPI reports tend to be a little crazy. They can make the market move a bit, so I tend to watch out for CPI reports, although not always. CPI sometimes. Interest rate announcements, speeches. I tend to be very careful during speeches because, you know, if some guy opens their mouth and says the wrong thing, could just send the market flying in either direction. So speeches. And yeah, that's really about it. I don't let news affect my trading too much, to be honest. If I start looking at every news report and stay out of trades because of the news reports, I tend to it tends to cause a lot of problems with my trading. I tend to miss most trades, so for the most part, I don't really pay much attention to the news. I check which news reports are coming out. I'm always aware which ones are coming out, and how they might possibly affect me. But I tend not to stay out of trades unless the report is very big, or unless I've read about it on Bloomberg or whatever and found that it's going to probably affect the market, going to be way off consensus, something like that. But for the most part, no, I really don't bother. Sorry, guys. Sorry if you've asked questions twice, guys. It's just so hard to keep up. I'm just a little all over the place right now trying to keep up with the questions. I've got like just a mountain of text to read, and I'm jumping from chart to chart, and like I'm being asked a question about EuroCAD, but then I'm scrolled all the way up, so I have to scroll all the way back down to see what the responses are, and then have to scroll all the way back up. It's just a mess. Um, and normally when people do webinars in the Forex industry or in any industry, they just kind of cherry pick their questions. Like the chats aren't open and they just pick the questions they want to answer. I don't like doing that. I like to try and answer every single question that's being asked. And I know I've missed a few, but I try to answer every single question, and it does get a little messy. So I'm sorry about that, but yeah, it's just because I'm trying to answer every single question, and I want the questions to be open. I want everyone to be able to see the questions. I don't want them to be hidden away, and then I just cherry pick which ones I want to answer because they're the easiest ones. So yeah. Uh, so what kind of things are covered in the advanced course that aren't covered here? Um, in the advanced course, I cover everything in much more detail. Uh, there's a lot more information on how to accurately predict if it's going to reverse. Everything's covered in much more details, and the other main thing about the course is the forum. And the new chat room. Actually, there's a chat room there too, but it's in beta. The chat room, not um, it's not super active because it just opened 2 days ago. But anyway, the main thing about the course is the forum in which people share trades. So the strategy is discussed in a lot more details, and there's the forum where people share the trades, and they throw up their trades. Like this EuroCAD trade was posted by, it wasn't posted by me. It was posted by a member, and uh, wait, was it the EuroCAD trade? I can't remember. There's so many trades posted to the forum in the past few weeks, and I can't remember. I think it was a EuroCAD trade that was posted by a member. USD CHF on Monday was posted by a member. So like a lot of these trades are posted before they happen in the forum, which is the main part of the advanced course. Really, is where like you learn the strategy in detail, but then like you get to discuss the strategy and discuss the trades in the chat room and in the forum and stuff like that. Um, so yeah, everything's covered in a lot more detail, and it's more about the community, really. Um, Ford from Nigeria, that's a PayPal thing. I can't really change that. Just send me an email to the support system, and I'll see what I can do. But I'm not sure if I can do much because yeah, PayPal, I can't control it. Um, Kevin, send a support ticket in, and I'll respond to you on the support ticket. Uh, One sec. Just gonna bring up the send in a support ticket, and I'll just respond to you there. Any questions about the course? Let's not put them on the webinar, guys. I don't want to ramble on about the course in the webinar. If you have questions about the course, just send in a support ticket, and we'll chat there. Um, it seems like it's mostly questions about the course now, and not about what we learned. So, and we've run into the hour and a half, which pretty much takes us to the end of the webinar. When would you go from demo to live trading? Okay, that's another good question. Um, it really depends on you, but I'm one of those people, one of those very few people in Forex who are kind of against demo trading. I'm not completely against it. I just don't like. I don't think people should trade demo for too long, because if you're trading demo for too long, you kind of like develop some kind of false confidence where trading demo, the psychological aspect of trading is a lot easier because you're not putting real money on the line. And you tend to find that people who are trading demo, they tend to do a lot better than when they go to live account. So I say switch out of demo as soon as you possibly can. As soon as you find a strategy that you think is working for you for maybe a month or two, switch to a live account. But the most important thing is never switch to a live account with like $2,000 or something like that. Start small, start very small. I'm talking $100. You're not going to make like a fortune from the $100. You're just trading very, very, very small amounts, but you're trading real money. It's the real market. And then like as you start to notice, hey, I've got another 2 months under my belt and I'm still successful, throw another 100 in. Another month on, throw 200 in, 300 in. Whatever you're comfortable with. I don't want to tell you the exact amounts. It just comes down to whatever you're comfortable with. Um, and you should slowly add money to your account. You build your account through trading, but you also add money, from your pocket, from your bank account, whatever, into your trading account. And you just slowly build it up, and it really helps get the psychology of trading down when you're trading on a real account, um, as opposed to a demo account. So don't stay on demo for too long. Use demo to test strategies. Once you find a strategy that is working for you, for even for just a month, switch to a live account with a very small amount of money, whatever you can afford to lose, because when you switch to live, you probably are going to start losing some money. So whatever you can afford to lose, and just take it very easy, very slow, and slowly build your account. And like a year down the track, if you've been trading the strategy successfully for a year, and you've kept investing money into your account, and now you have 2,000, 3,000 in your account, that's when you start building the account. All right, guys, I'm going to end this webinar. I'm going to end the recording of this webinar now because The recording's gone on for an hour and 40 minutes, but I am gonna still be in the room if you guys have any more questions. I'll probably be here for another 10, 15, 20 minutes, something like that. So just give me a minute.